The best way to characterize the commodity markets these days, volatility. Have a look at the chart for copper, for example, over the 3 months. Our next guest, however, says future prices don't tell the whole story and can cause investors to miss hot opportunities. Colin Fenton was one of the original members of the Commodities Research Group at Goldman Sachs. He currently serves as CEO of Curium Capital Advisors, which specializes, in commodities and natural resources markets. Colin is with us from Boston this morning. Colin, we just showed everybody a picture of copper, but sugar is another commodity that has been extraordinarily volatile as of late. Going back to November, you told us that sugar, in your opinion, was a commodity you wanted to be in. Since then, sugar is down by 10%. Year-to-date, sugar is actually down by a great deal more. Do you still feel the same kind of conviction for sugar that you did then, given what we've seen happen?
Yeah, good morning, Eric. Absolutely. You know, I think the main takeaway here is that all of these commodities are exhibiting incredible volatility. Sugar is now a 40 volatility market as opposed to a 20% volatility. It's twice as volatile as normal. And if you go back to November, what's actually happened is there's been a run up from 20 cents to 30 cents, back down to 20 cents again. So we've done a round trip. The way I would characterize it is an upward move is not necessarily positive. A downward move is not necessarily negative. And the main question I would ask is, we've had the pullback in price driven by India, the world's largest consumer, basically stepping back from the market, canceling tenders, and signaling to the market that it's now even shorter than it was before, but at a lower price. And so looking forward, I think what's going to happen here is you're going to find people looking at the shape of the forward prices, the futures prices, which are now below the marginal cost of production. They're going to see that the largest consumer must buy, and they're going to anticipate that buying will happen.
Colin, equity investors are familiar with volatility, no least because of the VIX, and they know it can be a stomach-churning experience. So in the case of volatility, what's your advice? Do you think it's going to become less volatile over the course of the year, and so that experience, that anxiety will ease, or would you advise people to look for commodities that are going to experience less volatility?
Well, I'd say the good news is that the recession is over. There's no doubt about that. It ended in the third quarter of 2009. The problem is that it's not going to feel like it until the first quarter of 2011. We're in a transition year, and I think stomach-churning volatility is exactly the right phrase. It's going to be very confusing, very disorienting. The way we think about it is we look at the last year, and the Fed provides a proverbial punch bowl to markets. It provides the punch when it's needed to stimulate markets and takes it away when it's time to calm down markets. In the past year, we liken what has been given to markets as a Red Bull rally. Policymakers in Beijing and Washington not only provided the punch, they supplied intravenous high-octane energy drinks into these markets, and we've had this incredible move upwards.
Now,
the Red Bull rally.
I was just going to say, most of us look at the commodity markets based on what we can see happening on exchanges, but by virtue of the access to information you have, you're also seeing stuff happen off exchanges. What is that telling you?
Yeah, I think there's a tendency, you mentioned copper earlier, to look only at the LME price and the LME inventory. In our view, that's a mistake. You've got to realize that the physical markets are much bigger than what you're seeing on the screen. And just looking at the specialty steel prices, for example, they're up 20 to 40% year to date. You never hear about that because we're talking about very esoteric metals, vanadium, cadmium, ferromolybdenum. People can't even spell these things. Right. And so what I would recommend is looking at those items.
Colin, thank you very much. Great insights, as always, from Colin Fenton of Curium Capital Advisors.